US stocks fell on Wednesday, with investors pulling back from technology shares and financial stocks as concerns grew over bank earnings and new policy signals from Washington. Nancy Tengler, Chief Investment Officer at Laffer Tengler Investments, said markets are entering a more volatile phase, driven in part by uncertainty around proposals from President Donald Trump to cap credit card interest rates.
I think the market is going to be much more volatile in the first quarter than we are used to. And I think the reason for that is that we've got a lot of policy balloons being floated out of Washington, D.C. And so the algorithms read the headlines and they start selling as soon as they see that the president's going to cap interest rates on credit cards. That is not possible at 10%. I just don't see it happening. But you get the volatility in the short term.
The selling was heaviest in the technology sector, pushing the Nasdaq sharply lower.
I think the financial stocks are going to be just fine. What we're seeing right now is a reaction to JPMorgan's earnings. Investment banking was disappointing. That's one of the areas that they usually shine in. And you got the normal downbeat kind of comments from Jamie Dimon. Remember, he's been predicting the storm, the tornado, the hurricane in the economy, and that has been wrong. And so I have a tremendous amount of respect for him, but I think you have to take all of these reports with a little grain of salt. Goldman Sachs and Morgan Stanley will tell us what's going on in the trading markets and in investment banking. We'll get further insight into that. And then I think you have to hang your hat on the fact that we will see deregulation. Interest rates, I may be alone in this, but I think interest rates are likely to come down further, maybe not at the January meeting, and maybe not even in the first quarter or early second quarter. But I think we'll see another cut or two to interest rates, and that will benefit the banks over the long term.
Tengler said financial stocks were reacting to disappointing results from JPMorgan's investment banking business and cautious comments from its chief executive, but added she believes the sector will recover over the longer term as interest rates eventually fall and deregulation takes hold. By the close, the S&P 500 had fallen more than 0.5% to 6,926.60. The Nasdaq slid just over 1% to 23,471.749, while the Dow Jones Industrial Average edged down to 49,149.63. Bank shares were among the biggest drags. Wells Fargo tumbled after missing fourth quarter profit expectations, while Citigroup and Bank of America also fell despite beating forecasts. Analysts say the sector is under pressure after a strong 2025, as investors weigh how a potential cap on credit card interest rates could squeeze lenders' profits and slow consumer borrowing.